Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. So in trade yesterday in the US markets, that is, a lot of stocks showed a lack of direction early in the session, but moved notably higher over the course of the trading day. The major averages all moved to the upside, with the Nasdaq and the S&P 500 reaching new record closing highs. Going into close, the major averages pulled back off their best levels going into the close, but remained firmly positive. So we had the Nasdaq, which was up 168 points or 1%. The S&P 500 advanced 41 points or 0.8% for the day, while the Dow climbed 0.5%. Coming to the update in our markets in the week gone by. So yesterday was a holiday for our markets, but in the previous week, if we see, the index witnessed a sideways consolidation. That is, Nifty traded in a range of just 274 points. This posed the extremely sharp volatility which was seen in 1 week prior, wherein the index witnessed the highest volatility since March 2020. If we see in terms of range perspective for Nifty, this was the lowest weekly range in the last 8 weeks. Despite trading in a narrow range, the index has still managed to close at an all-time high with a gain of 1%. This clearly indicates that the markets have been witnessing time-wise correction after high volatility and steep rebound post the election results in the prior week. From a technical perspective, the index position at an all-time high coupled with bullish signals from the moving average and momentum indicators suggest a continuation of the uptrend. Coming towards the levels for Nifty, so going ahead, we believe the index may continue to consolidate in the range of 23,550 to 23,200. The penetration with strength on either side would open the gates for a trending move. Till it happens, we recommend to concentrate on the broader market, as the real action is seen in these stocks and momentum is likely to continue. In case the Nifty sustains above the levels of 23,550, then we may witness the next round of buying interest. In that case, it is likely to test the levels of 23,750, followed by the psychological mark of 24,000. While on the downside, if we see, the zone of 23,240, 23,200 is likely to act as a crucial support for the index. Any sustainable move below the levels of 23,200 will lead to profit booking in the index up to the mark of 23,000, followed by 22,800. Now coming to the update regarding Bank Nifty. So Bank Nifty has traded in a narrow range of 200 and 722 points respectively, which was the lowest weekly trading range since April 2024. If we see on the weekly scale, it has formed a small body bullish candle with shadows on either side. This clearly indicates indecisiveness at higher levels. The daily RSI is oscillating in a narrow range of 55 to 57 zone. Further, the trend indicator, that is the ADX, is currently quoting below 16 level and it is in a falling mode, which indicates a lack of strength in any direction. So going ahead, the zone of 49,500, 49,400 is a crucial support area, and the level of 50,300, 50,400 is the resistance zone. Any sustainable move on either side would lead to a trending move. A sustainable move above 50,400 will lead to a sharp upside rally up to the mark of 51,200, while if the index slips below 49,400, the next support is placed in the zone of 48,850, 48,800 levels. Coming to India VIX, so for the second consecutive week, the India VIX, that is, has continued its southward journey. It has ended the week below 13 mark with a loss of 24%. From the high of 31.7, the India VIX has tumbled nearly 60% in just 8 trading sessions. So along with this fall, it has slipped below its short-term and long-term moving averages. Most noteworthy, it is comfortably trading below its 200-day EMA since the last 3 trading sessions. The daily RSI has also slipped below the 40 mark for the first time after April 2024. So this clearly indicates that the overall market volatility has decreased significantly over the last couple of trading sessions. So going ahead, India VIX is likely to test the levels of 10.8 in the short term. Now coming to the update regarding the broader markets. So despite consolidation in frontline indices, the broader market has shown remarkable performance in the last week. The Nifty Mid-Cap 100 and Nifty Small-Cap 100 has surged by 3.82 and 4.81% respectively. They both have outperformed the frontline indices by a decent margin and marked fresh all-time high. Most noteworthy also the ratio chart of Nifty Small Cap 100 Index as compared to Nifty has given a horizontal trendline breakout on the daily scale, which is the bullish sign. While the ratio chart of Nifty Mid Cap Index as compared to Nifty is making a sequence of higher tops and higher bottoms. So this clearly indicates traders and investors should focus on mid cap and small cap space for the next couple of trading sessions. For Nifty Mid-Cap 100 Index, the zone of 54,200, 54,000 will act as the crucial support. As long as the index is trading above 54,000, it is likely to test the levels of 56,500 on the upside, followed by 57,000. For Nifty Small Cap Index, the zone of 17,750, 17,700 will act as the immediate support. As long as the index is trading above 17,700, it is likely to test the levels of 18,300 followed by 18,500. Now coming to the sectors and stocks in momentum. So last week we had the stocks from the defense and shipping space which have witnessed extremely strong traction and momentum along with the robust volumes. We believe they are likely to continue their outperformance in the next couple of trading sessions. Apart from this, we also have Nifty Auto, Nifty Realty and Nifty Pharma and Nifty Healthcare space which is likely to continue their upward journey. So that's it for today's session. Thank you for regularly listening to our podcast. Wishing you all an energetic day ahead, and do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.